Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Friday. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. Today I wanted to give a little bit of a market update after a pretty significant week when it comes to job data, which right now I think is the most important type of data for moving the markets and determining what the Fed's going to do. So what we saw this week is much lower than expected job growth for both the ADP employment report, which shows private sector job availability, and also the employment report today, which also includes government employees. Both of them came in lower than expected, and both of the previous month's reports were revised lower. So the available jobs are clearly declining. However, unemployment rate went down a little bit, which isn't a big surprise after the entire month we had lower initial jobless claims than the previous month. So the market has reacted to this news with kind of a crazy up and down movement. As of the last time I checked, there was a 77% chance of a quarter point rate cut and 23% chance of a 50-point rate cut. Now that's actually not too far off from where I think it. Just earlier this morning, like 2 hours prior to that, we were at 53% likelihood of a quarter point rate cut and 47% likelihood of a 50-point rate cut. So I'm really not sure if there was any actual news that changed that, but the bottom line is I do think that we are going to get a quarter point rate cut in a couple weeks when the Fed makes their next rate decision on the 18th. And the reason for that is, even though we have seen these declines in job openings, we're still, like, if you're looking at it from a standpoint of the percent decline, you'd be concerned because it has come down quite a bit in the past few months relative to the last few years. However, when you look at the historical data, we're still at a place where it's no longer this crazy hyperinflation driven job market, but at the same time, we're nowhere near really recessionary levels of both unemployment rate or job availability. In the really rough years of the past, when we've had recessions, there's negative job growth, more jobs going away than being created. That is not the case right now. So I think those that still think there's a chance of a 50-point rate cut, either they're thinking that inflation, which comes next week, the CPI report, PPI, maybe they're expecting those to come down dramatically, or I think what's more likely is there's an expectation that because we've seen this steep decline, that's going to continue tipping us into recessionary levels, which would definitely prompt the Fed to make a 50-point rate cut. However, that's not how I'm looking at it. With unemployment rate specifically, we saw that tick up. And I think if that had continued to rise, then we would be looking at a 50-point rate cut. But the fact that that is flattened, and the fact that we are not at that recessionary level of negative job growth or even near zero job growth, we're still having a normal level of job growth, I think the Fed is going to be comfortable with just a quarter point rate cut. Based on that information, the fact that the probabilities have shifted today, and I'm curious what that does to rates, because it should lead to an uptick of rates later today. I'm still expecting, as we reach that consensus of a quarter point rate cut, mortgage rates to get worse over the next 12 days from now until the next rate decision. So keep that in mind. If you're in the process of buying a house, I would definitely lock in your rate as soon as possible. But I'll definitely provide any updates if something comes in that dramatically changes things. If you have any questions, as always, shoot me a comment below or feel free to call, text, or email me. But thanks everyone for tuning in, and I will see you next time.